So right here, we want to see the market come down into our new week opening range gap. So you can see this, right?
Yes, sir.
Yeah, so this is the only area I'm interested in buying US 30 for the new week. I really want to see it come down into this position. If it can do that, this would be an area for me to wait for like 5 minutes break of structure and look for buys to continue higher because we still have this low right here. This is liquidity. Something in that video I said, whenever you see a previous day's high,
Fine.
and then there's a fair value gap right there, resting
Press
above
what
that
we
high,
okay.
price will
Press what we
most likely
follow.
come there to take that liquidity, the previous day's high liquidity, and then reverse. That is,
Yes, sir.
now you need to understand this is not something one size fits it all, where you just once you see a previous daily high, see family gap, you just sell. No, that's not what that means. Number one, you need to understand the direction of the markets first from the higher time frame. Now, in this case, US 30, the direction of the market is bullish. From the higher time frame, from the 12-month time frame is bullish. 6 months is bullish. Right here, this is 12 months, it's bullish. So, and us coming down here to mitigate this fair value gap, what we're looking for is an opportunity to buy. Now, we can see a clean, clear break of structure on the 30 minutes time frame, which is what we wanted to see because of the alignment of the daily fair value gap to the 12-month fair value gap. So
Yes, sir.
right here, there's a daily fair value gap aligning with this 12-month fair value gap. That is the reason why we're waiting for a 30 minutes break of structure, which is this, and it's been broken. Now that high has been broken, there's a fair value gap resting right here. We can scale through time frames to see, and you can see there's still a remnant of that fair value gap. And if you go to
Yes, boy.
4 hour, we still have this remnant of this fair value gap. And we haven't broken above this high. So if we go to 8 hour, there's still remnants of that fair value gap. We go to 16 hour, there's still a fair value gap resting right here.
Yeah.
Now, there's a fair value gap here, number one. There's an inverse fair value gap here, number two. There's a new week
The
opening
last
gap, number three. And if we even scale down lower, you will see that if we scale down even lower, you will see that despite the fact that this is the major last down close candles, this was also the last
outbreak.
impulse before breaking. So price can still decide to want to come down to revisit this zone
Okay.
here. Price can still decide that it wants to revisit this zone before that rally. So you have to mark out these zones prior before it comes there. That is how you build confidence. Because let's say, for example, you're not anticipating for this to happen, and then it happens. You're not going to take the trade.
Yeah,
You
you'll be
just,
scared.
exactly, you'll be scared. But let's say you've marked out all those positions, everything outlined, and you're not even just jumping in to randomly put a trade on. You're just marking it out and you're just waiting patiently for price to come there. And if price comes there, the next thing you want to see is a smaller time frame break of structure. Once you see that 15 minutes break of structure or 5 minutes break of structure, now you can enter your trade because you've seen a confirmation.
Yes, sir.
So you just follow it that way. Keep it simple. Don't complicate it. Wait for a confirmation. If you see that confirmation, first of all, you see a run on liquidity. You see a mitigation of your point of interest, whether it's a fair value gap or new week opening gap or
That's that.
last down close candles. Anyone you see the market mitigate, you now wait for your smaller time frame, 15 minutes or 5 minutes break of structure. The moment you see it, you look for buy opportunities.